Matt is from Windsor, Illinois. He's a farmer and former grain elevator owner. He is Channel Seeds grain marketing consultant and holds a Series 3 brokerage license, and he does business through agmarket.net, a farm division of JSA. Matt brings the producer perspective to the table, enriched with his extensive grain marketing background. He specializes in risk management strategies for corn, soybeans, farmers, and livestock producers. Matt's analysis and commentary on the grain markets appears on various TV and radio stations across the Midwest, including Ag Day, U.S. Farm Report, and a show I'm very familiar with, Agribusiness Today. A graduate of the University of Illinois, Matt and his wife Tiffany live on a centennial farm north of Windsor, and they have 5 children. He owns and operates a 3,000-acre corn and soybean farm with his father while raising 60 head of registered Angus cows. Please, let's welcome Matt Bennett.
Thank you. How are you guys this morning? Great. How many of you guys heard me speak a year ago down in this neighborhood? How many of you guys did a good job marketing after that presentation? You guys remember what we talked about? Anybody? A year ago today, things were a lot different than what they are today. Okay, so if you came here to hear good news from me, I'm sorry, but I'm just going to lay it out, what I see. It's a tougher ball game that we're playing right now than what we were in a year ago, okay? I'm going to put the pressure on Eric Snodgrass, quite frankly, because if Eric doesn't come up with something for us, we're going to have a rough go. So what I'm going to do is I'm going to speak, and then I'm going to get the heck out of here, and then you guys can all work it out later. But, I don't want to be too down in the mouth, but what we've got going on now is a change of events, okay? And it's one thing that I talked about a year ago. Whenever prices go so high, typically what happens is you have a whole lot more production and demand goes down, right? I mean, it's just the way that things work. And unfortunately, I think the rally or the good times didn't last as long as what a lot of people thought that they were going to last. Okay, so yes, managing risk in a volatile market, it's a very similar presentation as far as how I'm going to break things down. But what I'm going to try to do is I'm going to try to show you the facts. We'll try to figure out what we think is going to happen, first of all. And then second of all, as we get towards the end, I'm going to try to give you some different scenarios, okay? But the grain sell-off obviously has been rough. I really was hoping we'd see some buying come in at the start of the calendar year. I thought maybe we'd see some money flow. Well, we did see money flow. The problem was it wasn't on the right side, okay? Or our right side, so to speak. It doesn't look like people want to own commodities right now, especially ag commodities, which is frustrating for many of us. We do have a report tomorrow, though. We'll talk more about that in a minute. Evaluation of profit margins, though, and so, and it kind of goes with the next one. Risk management is about more than just the price of corn and beans. So let me ask you a question. In the last 24 months, has the timing of your inputs, the purchases that you've made, have they made just as big an impact on your profitability as what your sales have made? Yes or no? Particularly fertilizer. All right? And so risk management is about more than just the price of corn and beans. It is. I mean, and so what mistake did we make on the 23 crop? Anybody? Did anybody in the room pay a lot of money for inputs and not sell corn at the same time? One honest guy in the whole room, right? Guys, a lot of us did. But here's the problem. When you're paying high price for fertilizer, what else is typically going on? What else is high? Price of corn, right? Now, if I ask you, how many times have you paid fertilizer been too high whenever corn was cheap? You're all going to raise your hands because we all think fertilizer's too high every year, correct? But when fertilizer's at multi-year highs, is corn going to be low or high? It's going to be fairly high, right? We know prices will be fairly high. So managing that is something we're going to talk more about. And then what adjustments do I need to make? Well, what adjustments do we need to make? Does this feel more like a 21 and 22 or a 2011-12 ball game, or does this feel more like 2015 through 19? What do you guys think? I mean, this sentiment today does not feel like a rosy one, okay? And I'm not trying to be negative. I'm just saying the way that things are laid out are not looking as pleasant as what they did, for instance, 1 year ago today. I'm just being honest about it, okay? So what do we have tomorrow? We got a report. How many of you guys in here have a hedge account? A hedge account, like where you can options. Okay, not very many. So this joke may not make, this is a little dark, but we've got a report tomorrow. See if this makes any sense to you guys. I don't know. I usually use one where this guy says something about the USDA may as well lower my coffin so they can let me down one last time. I love that joke. It's fantastic, but I stumbled across this one. So this was the last report. Every single thing at the top of the ledger here, corn, wheat, beans, bean meal, bean oil, everything's negative from 1 year to the next. So marketing year on marketing year, last year to this year, you've got negatives. And they're fairly strong negatives, as you can see. You know, for instance, corn down $1.69. I mean, that's a pretty big haircut. That's a pretty big haircut. And so what you've got is a deflationary type environment. It's a different environment than what we've been in, and that's all there is to it. As we move forward, you know, this should precipitate demand. We should see things happen for us. Typically, would you rather see a supply-led rally or a demand-led rally? What do you guys think? I would rather see a rally based on strong demand, because if it's a supply-led rally, it's going to go away just as fast as it showed up. A demand-led rally, though, has got staying power. We should be able to finally see things work their way out. Am I predicting that 24 is going to be a fantastic year income-wise? Not necessarily. So let's talk about corn, and let's just look at some specifics here. So beginning stocks right in the middle, 300 million tons of corn. USDA is saying, again, this is as of December. This will change most likely. I don't expect it to change a great deal tomorrow. 300 to 315. So what this is saying is that in the marketing year, the USDA is predicting we're going to raise more corn than what we're going to use on a worldwide basis. What does that typically mean for price action? Down, right? That's what it means. We're just looking at facts. U.S. supply and demand, ending stocks, 1.361 billion bushels. The prediction as of December was 2.131 billion bushels. Marketing year to marketing year, you're going up 800 million bushels, all right? If that happens, typically what happens with prices? Down. I mean, you're talking about stocks use goes from 9.9 to 14.7, but whenever stocks go from 1.3 to 2.1, that's over 50%, correct? I mean, you're adding 800 million bushels on top of 1.3. And so bottom line is, when we look at it that way, it certainly looks to me like we've got an uphill battle ahead of us. Now, the other thing is, let's say our carryout ends up at a $2 billion. Does $2 billion typically correlate with $5 corn? 2 billion bushel carryout? No, it doesn't actually. In fact, it correlates a lot closer with $4 corn. I'm just being honest. I mean, you might say, well, what about inflation? How many times have we had that conversation over the course of our careers? Well, inflation's got to mean that corn's worth so much. We've got to be at a new plateau. I sat here last year, not here, but out on the circuit last year, and people said, we're at a new plateau. We're never going to go back under $6 corn. Okay. Usually when people make comments like that, I buy put options. Right? Whenever we all think that this thing can't go lower, what typically happens? It goes lower. The market tries to inflict as much pain on, I'm convinced, as much pain on people as what it possibly can. Okay, there are opportunities though. This is my supply and demand balance sheet. I don't ask you to even look at it, but what I want to show you, if you can see it, is I take the 2.131 from the USDA and I carry it over into new crop, just to kind of show us if we keep demand constant, and we end up planting 91 million acres. How did I come up with 91 million acres? Well, when you take $1.50 haircut on corn prices, do you think that we're going to have 94.9 million acres again this year? I don't, okay? And so would corn and bean acres be close? Last year they were 11 million acres apart. I don't expect them to be that far apart. In fact, I think they're going to be a lot closer. But if I look at a 91 million acres, why would I come up with that? Because I think we take several acres off the corn deal, but I think we hold on to several of them. Why? Because whenever we were making decisions, fertilizer was a lot cheaper than what it was a year ago. And I think that those who like to plant corn are going to plant corn, is the way that I feel about it. But 91 million acres, throw 178 yield on it, it gives me a 2.5 billion bushel carryout. That's using the same demand. Now, if I'm going to be 100% honest about it, the way prices look today, demand should get better. So maybe you don't end up at a 2.5, but if you're going to try to tell me we're going to end up below 2, I'm going to say that's unlikely. Now, if we raise a 182, it gives you a 2.9 billion bushel carryout. So if you don't think some folks might be talking about 3 billion bushel carryouts over the next few months as a possibility, I disagree. I think some people will throw them out there. Why? Shock factor, just to try to get people to look at their stuff. I don't think we'll see a 3 billion carryout yet, but I do think that a 182 national yield in the U.S. is going to happen at some point soon. We've got the genetics to do it. When Mother Nature finally cooperates, I think we're going to see it happen. How many of us have had yields over the last few years that we never dreamed we'd see at times? Then when we see that, like a 2014 type year, those of you that remember that year, where everyone had pretty good crops across the board throughout the country, I think you're going to see a 182. So we always have to be prepared for that. What would a 2.9 carry do for price action? I mean, you guys know what it would do, correct? And so if I'm a producer and I'm sitting here and I've got $1 million invested in a crop, or whatever it is you've got invested in a crop, we can't just sit on our hands and do nothing. It did not work in 2023, and it won't work in 24 if we have a big crop. Now, this is the disparity from last year to this year. Okay, so the 22 crop we know out west was a drought, correct? 23 wasn't perfect, but it was better. And so 188, 204 million bushels in Nebraska, that was the increase in production. Okay, why is this important? What did this do for us personally with the West having a drought in 22? What did we experience? One thing, and that was basis. We had strong basis across the country. Why? Because these guys out here in Nebraska and Kansas, what do they have a lot of? Cattle. A lot of cattle. What do they need? They need a lot of corn. They need a lot of corn. And so you're sitting here and these guys are saying, we need corn like it's going out of style. Middle of harvest of 22, or end of harvest of 22. One of my elevator guys called me. I was picking corn. He said, why are you putting corn in the bin? I'm like, I don't know. I really don't. I'm just putting it in the bin, because we're on that farm. He said, well, I want your corn. I said, all right. I said, what are you willing to give me for it? And his posted bid was $6.80. He said, what do you want for it? I said, $7. He said, I'll give it to you. I'm like, why not? Sounds good to me. Here's what happened for the guy in Liberal, Kansas, though. One of my customers out there. This guy farms in the southwestern portion of the state a lot of high-yielding corn because they irrigate. A lot of cattle, too. Basis is usually pretty good. He calls me in the fall and he says, hey, I need to know whether to put this corn in the bin or what to do. The feed yards really want it. I said, well, if they really want it, what are they willing to pay you for it? He said, $9. I said, what's it making? He said, $2.20. I'm like, okay, what was your question again? I'm struggling to understand the question. All right, now, how many times have we done something really stupid like that? Anybody other than me? You wonder how I can speak with convictions because I've made every freaking mistake that I preach against. Ask my wife. She'll tell you that. I make a lot of mistakes whenever it comes to marketing, but one thing I've tried to do over the course of time is try to remove the emotions of marketing and try to do it based on profitability, black and white, profit, return on investment. And so the bottom line is, this is going to have an impact. Now let's just see how big of an impact it had as of the calendar turn. ADM Decatur, prices at the end of 22, beans were $15.34, corn was $7.04. Okay? Don't get lost on this fact though. even with 678 and a half corn, we had a 25 cent over basis. I mean, that's incredible. What did we see just 2 weeks ago? 1298 soybeans and 473 corn with a 2 over basis. How much of an impact has this made? You know, and I'm not sitting here. I mean, usually this is the point in the evening meetings that I speak at. I usually tell people, if you don't have a drink, you may as well go get one because you're going to need it at this point. I'm not trying to be a jerk. I'm just being honest. Like this has been a gigantic impact, okay? But how many of us sat here with $7 corn a year ago and said, you know what, that ain't good enough for me? You know, as far as the cash was concerned, or new crop. Look at new crop. New crop corn, 601. 601 was your bid a year ago. And here's the reason why that's important, because you've paid so much money to put that crop in the ground, we should be shot for not selling some corn. Now, whenever I write my newsletter in the fall, I always analyze how many bushels does it take for me to sell to cover my fertilizer. Why is that important? Because if I'm spending an extreme amount of money on fertilizer like I did on the 2023 crop, I've just put myself so far behind the 8 ball that if something goes wrong, I'm in big trouble, okay? Now, I'm not trying to Monday morning quarterback. What I'm saying is if we don't learn from 2023, we've lost the ability to learn a really strong lesson. Now, the beauty of this is that we made a lot of money in 21 and 22, correct? The U.S. farmer, did we make a lot of money in 21 and 22? Absolutely, absolutely. So it's not like we're seeing a lot of sales pop up. But the bottom line is liquidity right now is not what it was a year ago. It's not even close to it, and it's a little bit more of an uncomfortable feel. So if the USDA is correct, it'd be the biggest crop we've ever seen, okay, in totality. Not the biggest yield, biggest crop. What does that mean whenever I see the farmer maybe 25-30% sold at this point on 2023 corn? What if you get a big rally tomorrow based upon something unforeseen? What do you think if let's say March corn closes up 20 cents tomorrow. Do you think cash corn closes up 20 cents tomorrow? Why not? I see you shaking your head. Why not? Basis? Anybody? Guys, I'm telling you, you think the elevator's trying to be a jerk? No. The elevator can only handle so much corn. Okay, so if the market goes up 20 cents, the elevator's going to say, holy smokes, we just bought a bunch of corn today. We got to back off the basis a little because we can't handle all this. That's the reason that basis fluctuates like it does. It's not just to be a jerk. Now, ethanol margins have fallen off here recently. But we still, as a team, feel pretty confident that they're going to stay above what we call a break even. And I think tomorrow you're going to get friendly numbers when it comes to ethanol. If you look, last week I think we burnt through 103.5 million bushels. The week before that was the second most ever, over 109 million bushels. The 3 previous weeks were over 106. Why do I say that? Because we needed to burn through about 102 or 3 to meet the USDA goal. I think USDA raises corn usage for ethanol tomorrow. That's a good thing. What else might they be able to raise? Well, 65-year low as far as cattle numbers are concerned, as far as the total herd inventory here in the U.S., correct? But cattle on feed are running greater than they were a year ago. Those are the folks eating the most corn. I think you could actually see feed usage go up just a little too. I'm not so sure we don't get a bit of a turn in the market tomorrow, to be totally honest. I'm not saying you rally significantly. I just feel like you'll finally get a little bit of support. This is the value of corn as far as exports are concerned. And I think it's pretty interesting. You look at Ukraine corn, it's the cheapest in the world, but Gulf corn at the U.S. is 25 bucks a ton cheaper than Brazil. It's a big reason why we've been able to see some solid exports here lately. You say, well, why isn't everyone buying off of Ukraine? They've only got so much to sell, first of all, and obviously there's some logistical issues there, all right? But the bottom line is the PNW, we felt like the Pacific Northwest would come into play a little more for 2 reasons. The Mississippi River levels, of course, first of all. Second of all, Panama Canal. Panama Canal, the levels are excessively low right now. The Panama Canal is not just connecting one ocean to another. It's a series of lakes, and they've been extremely dry in that part of the world. And so we felt like Pacific Northwest might come into play a little bit more, but river levels are actually improving finally. As far as the Mississippi's concerned, I've got to think that the Gulf's going to stay competitive. It is unfortunate, though, to see Brazil's looking at what? Brazil and Argentina, 100 million tons of exports for corn this last year, 52 for the U.S. You can see the U.S. used to be the main game in town. That's the blue line. You know, what are we going to see moving forward? Well, Brazil's the largest world corn exporter. Yesterday, an agency out of Brazil called CONAB, they make predictions. They said that our corn crop's not going to be near as good this year because we're not planting as much corn. All right, so they're not planting as much corn. Basically, that takes, you got to have excessively good corn to even have close to the same type of production. But they said we're still going to be the world's largest exporter at 2.2 billion bushels, I believe. Okay, so obviously Brazil is a powerhouse. I don't think they're going to slow down. It's different though. I don't know if you guys know what yields look like as far as Brazil's concerned, but you're looking at 100 bushel corn, 120 bushel corn a lot of places, but they can raise just as good as beans as what we can. And so that's a big reason why they've been continuing to see bean acreage go up. Lowest close, basically life of contract close, low 2 days ago or 3 days ago. I'm getting my days mixed up. It's been a long week. But we went down, I believe, to 452, okay? And then yesterday, or 2 days ago, we went down to 451 3/4. So we broke that 452, and then we closed up 4 cents, okay? What does that mean whenever you see something like that happen? It's a reversal in the market, okay? So if we can get a supportive type action tomorrow and go on a little bit of an upward trend, I think you'll see somewhat of an upward trend. Don't get excited on me though, all right? What do we usually do when the markets go up? We get bullish. It's this exact wrong thing to do, okay? I'm not saying it hasn't worked before. What I'm saying is, under the scenarios, I showed you the stock situations, correct? Do you think that maybe we should have some offers in if we're looking to sell corn? Guys, the market could spike up 25 cents tomorrow and close down 10. I don't know what it's going to do, but guess what? If you've got an offer in up 23, you're going to get your offer filled. But if you try to get your phone out, look at the markets, it's on 10-minute delay, you call the guy, hey, I want to sell corn up 20 cents. He's like, dude, it's down 10. That was 10 minutes ago. You know what I'm saying? Have the offer in place, whether it's old crop or new. I think it's a good idea. New crop. New crop looked pretty darn good up until about 5-6 days ago. And then, the new year has not been good to us as far as new crop corn goes. Am I selling right now? No. It's awfully early in the marketing year. If you can't make money, I don't want to get into some sort of I'm fearful it's going to go lower, so I'm going to go ahead and sell. Guys, if we put it in the bin, we can actually have a little bit of flexibility. This is a long marketing year, okay? But what price level would get me to sell some more corn? I'm probably around 5 1/4. And that's a ways away from where we're at today. A lot of it, though, again, has to do with profit margins. So if you tell me I can make money at 5.10 corn, sell some corn at 5.10. Why not? I have no issue with that. If you want to HTA some corn, no issue with that. Let's talk soybeans, and then we'll wrap it up at the end with we're just going to look at a lot of different stuff. But as far as beans go, I want you to understand something. How many of you guys have read about how bad of a drought Brazil's had? Several of us have read this, correct? You guys are, if you raise it, you can do this right here if you want to. It's not going to offend me whatsoever. But guys, here's the problem. Let's say Brazil has a even worse crop. CONAB yesterday said 155. Original estimates were 165. Okay? Let's say CONAB says 155. Here's the problem. Argentina last year was 25 million tons. They had what you would call a biblical level drought. This year, if they have average production, it was going to come up to about 48 million tons. Estimates today are 50 to 52. Okay, so if Brazil takes 15 or 20 million tons off of production, but Argentina adds 25, guess what? South America just raised more beans than what they did a year ago. Yes, Brazil could have a pretty crummy crop. Now, as you see here, the USDA was at 161 in December. I fully expect the USDA to come down to 155 or 6, okay? That's probably what we're going to see happen tomorrow. That's not a market mover. I don't think that's going to do us any huge favors, okay? But what you got to understand is that it's very unlikely that South America as a whole is going to raise less beans. And so if I look at the world balance sheet, beginning stocks 101.9, ending stocks at 114.2. Yes, this can change if you take 10 million tons out of Brazil. But let's say you take 10 million more tons out of Brazil. That gets you down to 104, and you're still building stocks. So on a world basis, it's hard to get bullish beans. Okay? U.S. is different. I know you're looking for good news. Here's something that I would say is friendly. Ending stocks for this year, 245. Last year was 268. What's the stocks to use ratio? 5.9%. The problem is, look at this. 6.2% last year to 5.9%. Directly under that, 1420 to 1290. Why? World stocks continue to grow. All right, the U.S. situation's tight. Stocks are tight. We've got strong demand. We've got increasing demand. We're going to talk about this more just a little bit later, but the bottom line is this. The market feels like we've got enough beans. That's what it boils down to. And so let's say that the U.S. stays extremely tight here, okay? The one thing that I'm concerned about, we have a ton of animal units, grain-consuming animal units on the southeast coast, okay? Think the Carolinas, okay? A lot of birds, fair amount of hogs. What do they like to eat? Bean meal, okay? Those are multinational companies feeding those out. Are they going to buy Brazilian or Argentine bean meal or U.S. bean meal just as a goodwill gesture? It's going to go to whoever's got the cheapest price. That's the problem. They're going to import beans or bean meal, most likely, if we keep our prices very strong. Okay, it's frustrating. It's just the way that things work. I think we're going to keep a balance sheet fairly tight. But what do I look at for acres? I'm going to go with 87. I don't know if anybody read the Farm Futures article I wrote last week. I've had a lot of good feedback on it. But my hypothesis is total acreage in 2024 will be lower than a year ago. Why? Profit margins, first of all. Second of all, we had excessively low prevent plant last year. Abnormally low. I don't expect that again. And I think that someone who is in an area, for instance, North Dakota, there's always a lot of prevent plant. If I've got a reason to be able to take prevent plant in that particular situation, and I see commodity prices where they're at currently, I'm probably going to be more liable to do it than what I was a year ago. Okay? So I think that total acreage will be below a year ago. I'm going to come up with 178. So if I take 91 out of that for corn, that gives me 87 beans. I think it's a pretty logical number. 4 million acre split, I think it could even be closer than that. I don't know. I do think there'll be a lot of beans planted this year. If the markets don't change between now and springtime, there's going to be some folks that are going to opt for the lower input crop. I think that it'll happen. And there's other reasons that I think that it'll happen. But what does that do? 87 million acres, 477 with a 51 bushel yield. If we knock it out of the park at a 54 bushel yield, it gets clear up to 700 million bushels. So I would say this, I'm not super friendly beans. I think that selling rallies for both corn and beans is where my head is at currently. Now, if I look at Brazil, this green line here, that is the acres planted, or hectares, whatever they say. All right, 18th year in a row we planted more soybeans in Brazil. 18th year. I mean, it's just an incredible increase in acreage. You say, well, when's this ever going to slow down? It's not. Not anytime soon. They've got the Cerrado. It's an area that there's millions of acres that they can still go in and develop. You say, well, what the heck? I mean, how are they able to afford to do that? Some of you guys may have heard me tell this before, but I've been in a room, Farm Future Seminar in Iowa, and there was a panel after I spoke of Brazilian growers. One guy said he farmed 300,000 acres, the family. All right? I asked him afterwards, I'm like, how many combines you got? He said 85 or 90, I don't know, something like that. I'm like, what's 5 combines? But anyway, Max Armstrong was moderating the panel, said, how much money did you guys gross last year? What was your gross proceeds? He said, I'm just trying to get an idea of the scope of a farm this size. He said, about $250 million. Max said, well, what was, of course, this was set up in advance. I mean, they're talking finances, you know, but Max said, what was your profit margin? You know, 35%. 35%. 35% of 250 is a pretty big number in my book, right? So what does he want to do more of? Everything he's doing, I think. But he certainly wants, you guys have seen those pictures, the horror stories of trying to get that crop out of the countryside. Well, guess what? When they're printing that kind of money, they can figure out a way to make that work. All right? They're going to continue to expand. Now, what does the price look like? Brazil's 464 metric ton, Argentina's 462, and right now, as of 2 days ago, the Gulf was 485. So right now, as you're starting to get production go on in South America, we're going to be out of the game for a while. I don't expect that our exports are going to be anything great. And I would say even when we were cheaper, our biggest purchaser of U.S. soybeans didn't always want to do business with us unless they absolutely had to. Okay? And that has led to this. South America, 110 million tons. U.S., 47. All right? You go back several years, we were on parity. Anybody concerned about this? It's kind of a trick question. I know it's concerning, okay? Here's what I'm going to tell you. My personal opinion is this. When our trade partners get their nose out of joint and they don't want to buy U.S. soybeans, what happens to the price of beans? It goes down, right? If we can use more beans domestically and tell our trade partners, look, if you want to be a jerk, go ahead. If you want our beans, they're for sale, but you're going to have to come get them. We don't care if you buy them or not because we're using them domestically. Now, which one of those two scenarios would you rather see? I would rather see the one where we're self-sufficient as much as possible. Yes, I want to still have some export share, but guys, I'm telling you, you're going to lose export share. Why? Because Brazil is going to continue to grow. I mean, I'm not trying to just be the bearer of bad news. I'm telling you facts. That's the way it's going to work. And so hopefully our situation in Washington, and I'm not going to go into that, but hopefully that situation will be supportive of renewable fuels. And we're going to talk more about that in a minute. I'm a little concerned about world stocks, which is bordering on biggest ever. And then you look at crush margins. So crush margins were phenomenal up until about a month ago. All right. So crush margins in early December were running about $3 a bushel. I mean, you crush the beans to get what? Bean meal and bean oil, right? And you sell the products. How much money were they making? A ton. All right. Why do I think the acres are going to be strong? Because we've got crush plants popping up everywhere. What's your job if you're an originator and your crush margins are still running $1.20 a bushel? The crush plant doesn't run dry. And if your plant is getting online next June, you better have beans bought for fall. Or guess what? You're looking for a new job. So grain originators at these crush plants that are popping up have got to secure soybean acres. And that's part of the reason I think that soybean acres are going to continue to grow. Margins are probably going to stabilize somewhere in here, but let's just be real. Crush margins have really been hard on this soybean market over the last few weeks. I just drew a simple trend line, and I drew it in December. Obviously, you can see whenever we violated that trend line, what the market did. All this is just a lesson for you. Whenever, you don't have to be a chartist, but when you hear someone say, hey, if we break this trend line, I'm concerned about the market, this is why they're concerned. Because whenever the trend line is broken, there's a lot of people who trade. Guys, it's not farmers trading the market. I mean, we do to an extent, but there is billions and billions of dollars that trade this market on a daily basis. Tomorrow, whenever the market, whenever 11 o'clock shows up, I don't care what you do. You cannot beat what is going to go on at 11 o'clock because the algorithms plugged into these computers will trade this market based upon numbers, carry out, Brazil crop, you name it. And you could see the market up and down 25, 30 cents in a matter of a minute, okay? But whenever you violate trend lines, obviously it doesn't look real pretty. Now you can see if you can see it, there's a gap in the market. You go back about 5-6 days, I think we probably go back and fill that gap if we get some decent news tomorrow. If you do, I'd be selling the heck out of old beans if you've got them. That's my personal opinion. Same thing on new crop. You can see there's a gap in this market as well. I had a lot of folks tell me, Matt, I can't sell $13.50 new crop beans. And I'm like, why is that? Well, I sold cash beans in the last year or two for $16, $18, $17, depending on where you're at. I'm like, what in God's creation does that have to do with selling 24 beans? You know what I'm saying? How many times do we get wrapped up in the wrong things? We're thinking about what we sold something for last year. It's got nothing to do with what I'm investing in this year. All right? Can you make money at $12.50 beans? Absolutely. Guys, inputs are lower this year. They are. Roundup's cheaper. There's a lot of things that have worked in our favor here. Is it a home run to sell beans at $12.50? Not necessarily. Was it a home run to sell corn at $5? Not necessarily. But guys, home runs are what 21 and 22 are. And the best thing you could possibly do is get 21 and 22 out of your head. Because guess what? It's gone. It's over. Okay? That doesn't mean we're not going to go back to there. But let's put some things in our journal. I always tell my producers, write down what you learned from this marketing year. Write it down. Revisit it one of these days. Because when you start thinking, hey, maybe I should be selling a little corn. This reminds me of 2023. Right? We're going to see it again when we go into harvest and our ag chem retailers saying, listen, we better get some fertilizer booked. It's going to continue to go up. And the price of corn might be $5.50 or $6 at the time. What should you do then? You should say, okay, I'm going to go ahead and write you a check for fertilizer, but I'm selling 45 bushel an acre of corn. Because that's what I should have done before, and I learned my lesson. So I have a joke for starting here. I mean, this joke's getting to where it's starting to really irritate people, but this is a live look at your 2023 corn profitability. And I'm not trying to get run out of here, but I mean, I'm just, trying to have some fun. But let's talk about the dollar real quick. Dollar spiked up this last summer, and then it plummeted. We got down to some levels that we thought we were going to, potentially break 100. And if we did, that's a really good thing. Why did our exports pick up? Because our stuff got cheaper on the world market because the U.S. dollar was cheaper. And so you've got to root for this U.S. dollar to stabilize and kind of move lower. Nat gas plummeted. I actually didn't get yesterday's updated because we went down. Steep uptrend in here. Everyone was asking me, why is nat gas plummeting whenever you went into the end of the calendar year? I said, well, because I'm walking outside at 60 degrees in this December the 10th. That's why nat gas is down. But the thing that really irritated me is if nat gas is down, what should anhydrous ammonia be doing? It should be lower. What was anhydrous ammonia doing in the month of December? It was at $800. And I booked all mine for $550 and $6 early in the year, okay? That was kind of frustrating. People ask me, why in the world is anhydrous what it is? I said, because they can. I mean, it's as simple as that. We don't have to go into all the gory details. I thought we would go over, I've talked about what happens leading into a rally. If you've heard me over the last couple of years, this time I'm going to talk about, let's look at the rally and what happens after the rally. You guys all remember what happened in 08. You remember what happened in 12. In 08, it started raining at pollination. We stepped off a ledge, never came back. Lost $4 a bushel after pollination until Deese corn went off the board. It was a rough go. In 2012, a lot of folks said, hey, you know what, I'm not making that mistake again. I'm going to sell. And then we sold too much corn, right? But then you look at 2022, we held ourselves together. These aren't very strongly correlated, but they're all three what you would call multi-year rallies. So what happens on the back side of that? You look at 2009, we never really could do much. 2009 was a crummy year. I don't know about you guys, but all my corn came out of the field at 25%, 20 to 25%. We dried it all. It was just not a great year. Yield wasn't bad. 2013, never could catch a break. You can see that. 2013 just continued to leak lower. If you look at the second half of the year, and I'm talking, July, August, out to the end of the year, 2023 mirrored 2013. I mean, correlated very strongly. Could never get a rally. So what happens the following year? In 2010, you actually rallied to $6. That would be the year that we're trying to look at this year. In 2010, you rallied to $6. 2014, you never really could get anything going, topped out at $5.14. What's going to happen this year? All right, what did you have going in 2010 that you don't have today? You still had strong ethanol demand that hadn't peaked, okay? And so anytime that we look at how we think things might react, I've got to look at the whole picture. Which one of these years might we be more strongly correlated with? I think 2014. Partially because the way that the 2013 and 2023 D's corn markets traded so similarly, I've got to think we continue to carry that through, especially 2014, we were in a stocks building scenario. 2024, you're in a stocks building scenario. So be very cautious is to sit on your hands if you get a rally. I tell you, if you want to put a handle on this, the company that we work with, Ag Market and JSA. JSA is a commercial-based company. They deal mostly with end users, ethanol plants, feed yards, whatnot, elevators. They do this high-low. And what they do is they plug everything in as of the first year of the month, or of the year, first day of the year, as far as carry out, stocks, where's the market at right now, and then they say, what is the high and the low? And I believe it's on a 90%, you're 90% sure of it, okay? As of the start of this year, that range was from 560 to 375 for D's 24 corn, just to give you an idea, okay? And so if I get into a level, let's just say we go back above 5, which I expect us to do. I think we'll do it. And let's say that everything's going good and we actually do get a rally to 520, 525. When you get close to 530, what should you be thinking about? That everyone in the freaking Midwest has about got $5 corn out of the field about to show up on their bid sheet. Does anybody else want to sell $5 corn? Of course they do. And so what I'm going to tell you is if you do get to 5.25 or higher, you're probably in the top 5 to 10% of what the market even could do this year without just a historic drought. Okay? And so you say, well, how aggressive does the guy want to be? Well, that's where you've got to be smart. You've got to manage your risk with flexibility. All right? You have tools you can use today that are not going to strangle you to death if you lock a floor in and you do so with the ability to run to the upside that aren't going to be margin. I know a lot of people are afraid of margin calls. I totally understand why, but I thought it was extremely interesting this last year to see. I just wanted to kind of break this up a little bit. January crude to live cattle. Anybody in here have cattle? How many of you guys feel like cattle are going to rally this year? I mean, what would you say has a better chance of rallying? Corn, beans, or cattle? Anybody? Cattle. Absolutely, absolutely. I thought it was super interesting. Cattle are usually very strongly correlated to equities. The Dow, S&P. If you feel good about your financial situation, typically you eat T-bone steaks and not pork chops. No offense to pork producers, it's just the way that it works, okay? What's been strongly correlated, though, is crude oil. And what I'm going to tell you is that you're at a 65-year low in the cattle herd here in the U.S., but cattle on feed continue to run over 100% of a year ago. What does that mean? That means the cattle herd continues to shrink. People are, instead of putting the heifers out in the pasture, they're putting them in the feedlot. Last year they didn't have a choice out west because they didn't have pasture. They're getting pasture again. Now they've got a choice. And so some of those heifers are going to go to pasture. Now, I can't blame a guy wanting to sell an 800-pound heifer for $2,000 because it happened a lot over the last year, $1,800, whatever it might have been. But I'm telling you, the cattle market, if equities in crude oil don't fall apart, cattle are going to skyrocket in 24. I feel pretty confident that you'll see that $200 fat cattle We got to 199.50, 199.60 this last year. I was rooting for it. Why was I rooting for it? Because I told Paul Yeager on Market to Market we were going to go to $200 fat cattle in 23. I missed it by 50 freaking cents, and he will not let me forget about it. So let's look at crush capacity as we try to wrap up. I just want to show you this. There's a lot of different crush plants popping up, but who can you see at the upper right-hand corner? Marathon, Chevron, Big Energy. Big Energy likes renewable. Why do they like renewable? Because the government has shown that they support renewable. If you go to California, if you run a truck fleet in California, you can't buy anything but renewable diesel. What does B20 have as far as soybean oil? What's the percentage B20 has that you burn in the summer sometimes? 20%. That was an easy question, guys. Come on, wake up. Let's go. What about renewable? What percentage of soybean oil can go into renewable? 100. You can go up to 100. What does that mean for soybean demand? What does that mean for crush demand? 700 million bushels by 2026 is the current projections. But why did soybean oil, which is up here, why did it top out this last summer? Because we got to 65 bucks, highest that we'd seen in a long time. And guess what? Renewable can be made out of things other than soybean oil. That is their preferred feedstock, but it can be made out of other things. Now, this is one of my favorite slides. You see any issues with this one? And I'm not anti-EV, okay? I'm not a fan necessarily. With all the travel I do, I can't make it work, okay? I just can't. In the city, I'm sure it works perfectly fine, but here's what I'm going to point out. Big oil likes renewable. We established that, correct? Historically, has big oil liked ethanol? That's an easy question. No, heck no. They can stand ethanol. They fought it tooth and nail. And I'm not going to say that they've hopped in bed together, but I think they're talking, or whatever it is the kids say nowadays. They're Snapchatting. I don't know what you say. But they're doing something. They like each other. Why do they like each other? They got a common foe. Their common foe, EV. Engine manufacturers, they don't like EV either. Big oil doesn't like it. Ethanol doesn't like it. And so you've got everyone working in tandem to try to get as carbon friendly as possible, okay? If you want to get excited about demand, sustainable aviation fuel is where I start to get real excited, okay? Renewable diesel, the demand that you could see, as I showed, was 700 million bushels. Sustainable, we don't know 100% if the U.S. government's going to stand behind it. This spring, it looks like they're going to go ahead and give corn-based ethanol the chance to be a part of this sustainable program. What's going on? They've tasked the airline industries to be carbon neutral by 2050. All right, now, it's not that they have to burn fuel only. There's money involved too, of course. All right, but what it boils down to is this. In the world, we produced 80 million gallons of sustainable aviation fuel as we start to go down this path. Okay, as people start to try to get greener in 2022. In 2023, the U.S. airline industry alone burnt through 1,300 million gallons of fuel. And so if you want to see explosive growth potentially in ethanol industry, which is more than mature, I think we can all agree, it could actually get saved. Fertilizer, we don't need to go into great detail, but DTN was saying here about 2 weeks ago, everything is significantly lower, anhydrous particularly. I mean, a lot of folks booked anhydrous this year less than half of a year ago. Farm Doc team just came out with this yesterday. I don't 100% agree with them on everything here, but in 2023, that crop, most producers in the state of Illinois, in this part of the state that they highlighted in their report yesterday, was running around $1,200 an acre for input costs, okay? They use some baseline numbers. They're saying you're going to get a little bit of relief as far as non-land costs, but the bottom line is it's still going to be a fairly expensive crop. Now, this is what they're showing for a cash rent operator in this part of the state for corn and 50-50 corn and soy rotation, is that you're going to be underwater. That's what they're showing, okay? I think we can all do the math. You know, if you're paying an aggressive cash rent, hopefully you've been in a situation where you know what your margins are and you're locking them in instead of doing it later on in the year. But this is from Farm Doc team. Extremely good group of guys. I was at the Farm Assets Conference with them in December. I saw some of the stuff that Scott Irwin and Joe Jansen were putting out. They know what they're talking about. What were they saying a year ago today? Do you guys know what they were saying a year ago today? Better be selling corn because we're going to have a hard time seeing this corn market rally. I'm not saying that they're the end-all be-all. This is what they put out, all right? This was the corn advantage over soybeans per acre in 2023, according to their books, and they're basing most of this on FBFM. Guys, corn won. Corn won over beans. And so why do I think corn acres will go down and bean acres go up? First of all, just a natural progression. If you're a 50-50 and you do corn, next year you do soybeans, right? And so that should artificially take, or organically, whatever you want to say, take bean acres higher. But the bottom line is beans are forecasted, in this case, unfortunately, to lose less money than corn. All right, so if you look at this again is cash rent. And you can see here, northern, central high, central low, and southern. You come down here into southern. Farmer return on cash rent, negative $160 an acre on corn, negative $107 an acre. I mean, obviously this is cash rent. What is the cash rent in this particular case? $207. I think Shelby County last year was $210. Shelby County, we farm in Shelby and Moultrie. Moultrie was probably $280. It's crazy. They're bordering counties, but Shelby's much larger and much more diverse. But the bottom line is it's going to be an uphill battle. That's what they're forecasting. We've got to be very cautious. Again, when we get rallies, we need to do something with them. On old crop, it's concerning to me to know if your corn is in the bin and you have any money borrowed, you're paying 3 cents a month simply to own the corn. If it's in the elevator, it's 3 cents plus storage, which is probably another 4. So you say, well, I'm going to go ahead and take free DP then. I'm going to figure this thing out. There's nothing free about free DP. I'm going to tell you that right now. All right? When I used to be in the elevator business, I couldn't say that. It was frowned upon, but I'm just going to tell you. The problem with free DP is that the corn is no longer in your possession, which means you have no bargaining power anymore. Okay? This is going to be a situation on old crop corn where you have to decide where you're going to draw the line in the sand. Again, if you feel like, good Lord, I'm the only guy in this situation, I'm telling you, if we're 33% sold nationwide, I'd be surprised. You're rowing in a boat with a lot of company, but that makes it even more challenging because you're rowing up current. Any rally you see, basis is going to react. Now, if I had corn in the bin at home, one thing I would consider doing is putting an offer in on July. I think basis in the short run is going to have an uphill battle, but I think by the time you get out to summer time frame, basis will be better than what it is today. And guys, there's carry in the market. A year ago, it wasn't like this. The last 3 years, it was the market was completely backwards. They wanted your corn now. They wanted your beans now. Now they want you to store your corn. What does the elevator do if you call them today and you want to sell corn? They sell the carry in the market. They wait for the end user to want the corn more than they do today. So when the basis improves, the elevator liquidates the corn, liquidates the hedge. That's how they make money. If I had corn in the bin, that's what I'd do. If I had corn in the elevator, I don't think that I would keep it there too much longer. I'm just going to put it that way. That's what it's been as far as the monthly cost of owning select commodities, corn, beans, wheat, you name it. I'm going to take questions. How many of you guys, anybody in here get the newsletter I put out? I know a few of you do. If you want my newsletter, you can do that, but I want to show you, okay, I have a conference February 4th and 5th. I know it's short on time. We've got enough people coming that the hotel ran out of rooms. It's in Nashville, Tennessee. If you're interested, ask me about it. I'm not going to stay around long after because I haven't been home in several days. But if you want my presentation, all you got to do, don't take a picture of it. Just let your camera hover over it and then click the yellow button. It'll take you to my website. You can sign up for the newsletter. You can sign up for whatever. But any questions about the markets? I hope I've covered my bases. I'm not trying to talk circles around anything. As you can tell, I'm not super friendly. What are the things that could make the market go up? If Brazil doesn't have a great crop, Eric will tell you what he thinks about that. We also need to see usage go up, and we need to see the U.S. not have a great corn crop. Okay? Those are the things you need for a rally. What are the things that I'm concerned about today? If Brazil has a big crop and we plant over 90 million acres, everything that I showed you could be a major headwind for us. The biggest concern for me, and I don't like using the term black swan, but my black swan event is if China invades Taiwan. I'm concerned about that because if we ever thought that a year couldn't get crazier after the last 3 or 4 years that we've gone through, I'm afraid that 2024 is going to be like hold my beer type thing, like just, guys, this is an election year. And I wish we didn't have to listen to all this junk over the next several months. But if I'm China, and I keep talking about this reunification effort, right? We want to reunify. Taiwan doesn't want to reunify. And so it's going to be hostile in some fashion. Hopefully we don't see a major war. But if I was China, would I want to do this in 24 or would I want to do it next year? And I'm pretty sure something's going to happen this year. If they're going to do it, something's going to happen this year. If China invades Taiwan, guys, you could take $2 out of the bean market like that. Whenever Russia and Ukraine had issues, you were concerned about the flow of grain and oil to the rest of the world. China is not selling us anything other than stuff. They're not selling us commodities. They buy commodities. So when your largest purchaser of commodities all of a sudden has ticked the rest of the world off, we've got some issues. So again, cover yourselves, cover your bases, because if that happens, guys, I think things are going to look a heck of a lot worse than what they look today, quite frankly, for a time. But if anybody has any questions, feel free to ask. I have to show you my last slides, my risk disclaimer, so you cannot hold me liable for anything that I said today. Thanks for listening, and holler at me if you need anything.